Hello and welcome back to the Geordie Pig Investor channel, and today I'm going to be going through my trading 212 portfolio. So I'm going to be revealing my £11,000 plus dividend investment portfolio, where I've recently hit a massive milestone that I will get into later on in the video. But for now, I'm going to start off by going through each of my holdings, showing you the position that I've got in that holding, how much money I'm up or down, and the share of the portfolio that position is. So I've always tried to have my positions at no bigger than about 6% per position, because especially for any singular stocks, because I believe that you don't want to have too much of a weight towards one position in case that was to crash, and then you're dependent on a lot of your potential dividend income and portfolio value through one singular position. So I don't mind ETFs being on the higher position. So you can see I've got a couple of ETFs here that are taking up over 27% of my portfolio, and my other ETF, which is EQQ down here, is another 4%. So my three ETFs are actually over 30%, close to 1/3 of my entire portfolio, which I'm actually very happy with. And if anything, I would quite like to increase my ETF position to about 35, maybe pushing on the 40% mark, as I believe with ETFs they're going to be reliable income, reliable gains every single year, and all these three do pay a small dividend as well, but these are mainly there for the potential growth rather than the dividend side of things. So as you can see at the top, my top position is VUSA. So for any of you American viewers, this is the equivalent to VU, so it's our UK version, which is VUSA, so it's the Vanguard USA, so the S&P 500 fund, and I have around about £1,700 in there, or that is how much it is actually worth. I have put into it just under £1,600. My next position is VWRL, which I own just under 15 shares of, for a cost basis of just under £1,350. And as well, you can see on both of these I am up a good amount of money. So I'm up around about 9.5% on this position and 11% on my S&P 500 position. Interestingly enough, you can see that I do have one stock that is above that 6% share of the portfolio. And the main reason for this is because I'm currently doing a challenge with Diageo. So every single week I'm buying £30 worth of Diageo, which you can see is roughly just over one share's worth. And I'm doing this for the entire year because I started the challenge at the start of the year as I felt the stock is undervalued, and I still believe it is definitely undervalued, and I'm very happy to do this for the full year, just as a little challenge and something to keep me accountable, to really consistently invest into a singular stock, which I'm happy to buy and has great dividend history as well. So it is always increasing its dividend and as a reliable dividend payer. So you can see with Diageo, I actually have £757 invested into there, and it is just only slightly up right now. I was up a lot more a few weeks ago, but it's had a little bit of a crash recently, which is brilliant for me as I'm buying every single week. So I like to see the stocks come down, because then it just means I'm getting it at an even better price. So you can see that it is just over 6.5% of the portfolio, followed by Vici, which is 5.36% of the portfolio. Again, I feel it's at a brilliant price right now, hence why it's such a big position, and I have just under £650 of that in the portfolio. It's currently down 1.6%, down £10, which is absolutely nothing, and I'm very happy to actually continue to add to this while it is at that current price. My next position is BATS, which is the British American Tobacco, and this position as well is coming in at around about 4.5%, so 1% less than Vici, and I have around about £520 in this position, which I've recently added a little bit more into to get it up to this figure, because again I believe it has a really nice price right now. The next stock is, as I mentioned earlier, an ETF, so it is EQQ, which is actually a NASDAQ 100 tracker. So that is what that follows, and it has actually had very good returns itself, being up over 10%. I forgot to mention the FTSE All-World up here. It's very similar to VUSA, but is actually inclusive of the entire world rather than just the top 500 in America, and it has quite a few more stocks in it, but I like to have the two of them even though they do cross over. My next stock is AstraZeneca, which is coming in at about 3.8%, and you can see I have around about £430 in there, and it is also up about 4%. And another REIT which I've been buying into, not quite as much as Vici, but also I'm very happy at the current prices, is Realty Income. As again, I believe this one is also at a really nice price, around about that $52 mark. So you can see I'm slightly down here as well, about 1%, but I've got £430 worth, and it is around about 3.5% of my portfolio, followed by Starbucks, which is also, I believe, trading at a really nice price, and I'm down 2.6% there. But I do have around about £360 worth, and I'm again been buying a lot more of that. My Shell position has been down quite a bit more recently, and the last couple of days has had a little bit of a rally, so I'm nearly back to evens here, and I have around about 2.4% of the portfolio there, which is £285. Followed by Legal and General, which was actually down today, but is still massively up overall in my portfolio. I haven't added this position in a long time due to getting a really nice price back last year in November, December time, and I'm just the type of investor where if I don't see it as a valuable price and a good price, I will not purchase it for the sake of it, even if I do like the stock. I will look for other value elsewhere, so that is why I haven't added to it. And then you're coming down here and you can start to see my positions that are coming towards under 2% of the portfolio. You can see Apple's in there, which has been massively down recently, so I have also been purchasing a little bit more of that, and then you can actually see I've got a flurry of all pretty much greens from there on out on the first page. I can then show you the remaining few stocks. So again, all these stocks are actually in the green, so all my smaller positions apart from Rio Tinto are massively up, which is a little frustrating because they're obviously smaller positions, but that's kind of partly why they're all up, is because when I've bought into these positions a few months ago, I have not been able to find a nice spot to get any more into them because they've been massively up. So unfortunately, a lot of them have sort of stayed as they are. But yeah, I'm really happy with the portfolio at the minute, how it's been performing lately, as I'm up to an all-time high, which I'm going to show you in a minute. And on top of that, I have around about 35 total stocks, and that's including the 3 ETFs, so 32 stocks. And I'm soon to reduce out of this one position here. I'm going to sell out of the Southern Company due to its dividend not being the greatest, and it's not having the best of growth recently. So, I've been waiting for this position to actually turn into a positive, because I've been in a red with Southern Company for a good few months now. So that's really nice to see that recently that has actually just about creeped into the green due to the fact that I've had £1.60 in dividends received, and the rest of them combined is just under that amount. So I'm probably going to sell out this position within the next couple of days and reallocate that capital into a couple of other businesses. But apart from that, I'm really, really happy with the portfolio. I feel it's very, very strong. And what I'll do now is reveal the amount that I am now bringing in as a passive income yearly. So you can see here, I am going to be bringing in around about £372 a year, which is phenomenal for me, considering I've only been doing it for 7 months now. And if you work that out, it is actually now over that £1 a day mark, which was one of my goals at the start of the year. So to hit it so early on in the year is fantastic. And you can see I've invested £11,200 so far. And a nice thing about on here, if I click across to my dividends, I can actually show you how this £372 would be mapped out over the next 12 months and where those payments would be coming from. So you can see them on here, that for the rest of this month I'm expected to bring in around about £26. Then moving on to next month, it is going to be up at 36, etc, etc. So you can see my only month which is slightly down on the rest of the positions is actually July, which is quite interesting. It'll just be totally down to the stocks and the months that they pay out, and I think it's down to the fact that some of the UK stocks only pay bilaterally, so that's twice per year. So there'll be a couple of them which just haven't fallen in the July month, which would fall later on in the year and earlier in the year, hence why the rest of the months are all a little bit higher than that month there, because you can see January is also a little bit on the lower side, so it's going to probably have similar stocks in the two of them. And I'm just really happy to show this with you guys and show that I'm now up over that £1 a day mark, which is also, as you can see on the monthly, actually now creeped over the £30 a month, which is also really, really nice to see. I'm yet to actually receive £30 in a month, but as you can see, it looks like potentially in April next month, I might receive that first £30 a month payment. I also do a video every single month breaking down the exact dividend stocks for that month, how much I've received from them, what my positions are like in those, what I've sold out of and bought every single month. So if you want to see that video, keep your eyes peeled. And I hope you've enjoyed the video today, guys. If you have done, please leave a like and drop a comment on anything you'd like to know about my portfolio, why I have certain positions, or any positions that you currently have or you think that I should add in here. I'm always happy to listen. So let me know, guys, your thoughts on the portfolio. I hope you've enjoyed the video. This is the Geordie Pig Investor, over and out.